Welcome to ETF Edge, your go-to place for all things exchange-traded funds. I'm your host, Dominic Chu, and they say a rising tide lifts all boats, and that has certainly been happening with the artificial intelligence trade. But let's not forget that the tide also goes out at times as well. So how can you make sure you stay afloat when all of that happens? Dan Ives is the global head of technology research at Wedbush Securities, alongside Todd Rosenbluth, the director of research at Vetify. Let's kick things off, gentlemen, with Dan. And you just launched an AI-focused thematic exchange-traded fund. The ticker is, maybe not shockingly, IVES. Ives, your last name. Your name is literally on the line with this one. So let's talk about why and what exactly is the impetus behind putting an AI-focused thematic ETF on the market.
No, great. And look, and it's awesome to be here. Look, I mean, to me, it's really, I wanted a thematic way for investors around the world to ultimately, invest in the theme. I mean, when I travel around the world, how do you invest in AI? So this was really based on my AI Ives 30 report, understand who are the derivative beneficiaries, whether it's software, chips, consumer, some under the radar, some maybe on the autonomous side. And basically, this is a dynamic list. It's a dynamic 30 names. Every quarter, we're going to change in terms of someone who come in, who ultimately come out. But Dom, for me, it was really all the work we do to put it thematically in a way that investors, whether retail, institutional, could invest in this AI theme.
Now, it's a concentrated portfolio. It's only 30 names that we're talking about here. Without giving away the secret sauce, because you're a fundamental analyst, you look at certain factors and whatnot, what are the common elements or factors, if you will, that go into why these 30 names at this point? And you mentioned the rebalance. How exactly then do you know, based upon those factors, whether quantitative or qualitative, what then maybe goes out and what else would then come in?
Yeah, it's a great question. I mean, look, we spend all of our time, whether it's here, whether it's Asia, across Europe, understanding what are the technologies driving AI. So whether it's on the chip side, in software, what ultimately, from an engineer perspective, from a customer perspective, who's ultimately driving, who's winning when it comes to the use case, whether it's Palantir, is it MongoDB, is it Snowflake? Then on the consumer side, whether it's, from names like Meta or some of the smaller names, who ultimately could play from a consumer perspective. So for us, it's our research. It's what we spend, my team spends all of our time doing, trying to understand who is driving the use cases, where is the technology going, but most importantly, what are the second, third, fourth beneficiaries, then the derivatives of AI.
Now, speaking of those orders of differential, those derivative type plays, where are you seeing most of the portfolio drift towards? There's 30 names. Are they mostly the consumer AI names? Are they mostly the hyperscaler types? Are they mostly the hardware or the software or whatnot? What exactly do you see right now being where the most heat is, so to speak, in those picks?
And in terms of the heat, like it obviously started off as chips led by NVIDIA, and of course they continue to be a core top holding, but it's software. In other words, the use cases are going to be driven in software, and that could be from hyperscalers to use case, whether it's Pega, whether it's Palantir, whether it's Mongo, because I actually think right now we're in the software phase. I think software is going to be driving really a lot of the use cases. And I think we've seen it with Oracle and others, right? Because to me, that's really going to be the epicenter of the AI theme over the next 6, 9, 12 months in terms of software, but it's trying to understand who within software. Just because they say AI on a conference call doesn't make them an AI player.
Now, Todd, this is an interesting one for a lot of investors out there as well, because this particular fund and these stock picks enter a kind of growingly crowded field in terms of thematic AI plays. From your kind of macro perspective, looking at the entire ETF market, just how competitive is it for asset managers and advisors to garner funds into the thematic ETF trade for AI? Or is the market, the TAM, the total addressable market, so big that it doesn't matter how many people enter because the demand is there from amongst investors, whether they're retail or institutional?
So we at Vetify, we find that advisors are using roughly 5 to 10% of their portfolio for more dedicated thematic investing. So some of the AI trends, we're going to see exposure in the triple Qs, the NASDAQ 100 ETF from Invesco and other technology-oriented ETFs, but there are some dedicated AI ETFs. The Robo Global Artificial Intelligence ETF, the ticker is THNQ, is a good example of that. It also takes a research-driven index-based approach. It's equally weighted around 50-55 stocks, and it's looking at companies that are both infrastructure and application layers tied to AI. So that's going to cover some of the technology areas that Dan talked about, but think THNQ also is going to have exposure to healthcare and robotics and sensors and things like that.
Let's also talk now, Todd, really quickly about the types of fees. It's always a big issue for ETF and fund investors out there. When it comes to this type of investing, it's these types of thematic ETFs that may charge a certain kind of fee structure versus just, say, buying the triple Qs, the SPY, or anything else with a tech overweight these days, specifically the Mag 7. So when you look at the fee landscape, is there a premium being charged by some of these thematic ETFs with regard to AI versus just, say, a tech-focused index fund?
Yeah, so thematic ETFs can and we think should be able to charge a bit of a higher premium than your broad index-based product. You mentioned the triple Qs, or VGT, for example, is a low-cost information technology ETF. But it's important to go beyond the fees, because Dan's fund, IVES, and THNQ and other thematic ETFs tied to artificial intelligence are going to be different. There's going to be devils in the detail with the construction. And so it's worth looking at what's inside the portfolio, not necessarily just the name of the label and the fee.
Now, Dan, many of these ETFs, thematically or otherwise, are market cap weighted. Is your fund cap weighted? And if so, that kind of leads you towards certain types of stocks that are out there. So when I say fees and I look at the outperformance that a fund manager would strive to go for, what exactly does your fund or your picks specifically do to garner the kind of outperformance that helps an investor justify the higher than average fees versus a traditional index fund?
No, it's a great point, Ty. It's a great point. So look, I think for us, it's not just Mag 7. It's not just that those first 4 or 5 names. It's trying to find who are those other names, whether it's 5, 10, 15 of them, that maybe investors right now, they're not even viewing as AI names. And we have a lot of those, in there, especially in software, in chips. It's trying to identify names that maybe today, thematically, you don't even consider an AI name. But it's a way that investors could look at the AI theme, and they're not just focused on chips, they're focused on software. Consumer, like obviously Meta being on there is a good example. Robotics, like Oklo is one of the names, is a good example because of nuclear. So it's our way, it's the way that we think about it and the way that we work on that theme. But again, those are names where, to me, it's very important to understand there could be a name today that's not on there. 6 months from now, if we find that that's a name that's become more and more of an AI play, then we'll put them on there.
How does your index, Dan, track or sort with regard to the weightings in those particular funds? Are they all equal weight to start at any kind of a rebalance period, or are you weighting them specifically towards a certain type of thing like market cap, or based upon the fundamental heft of the idea or how good of an idea it is versus, say, 1 to 30?
It's a combination. So in other words, the weighting is not just based on market cap, it's based on what I view as basically the ones that maybe have more of the power from an AI perspective. That's why you'll see at the top, I mean, if you look at names like NVIDIA, Palantir, names that are highest conviction. Look, there's also names where maybe they're a high conviction name today. They stay in the AI IVES 30, but they go to the bottom part of the list, depending on what they're doing. And look, and Dom, my whole view here was to make this dynamic, not static. Because around the world, investors always say, how do you play AI? How do you play the theme? Now it's a way all of our research could put it in a way that investors could play this regardless of where they are and who they are.
All right, so now I'm going to address the both of you guys again. Let's back up and talk about tech investing more broadly in the context of what else has been dominating the markets, which is this rapidly changing geopolitical landscape. Todd, I'll go to you for this one. We've seen a good amount of volatility around some of the recent developments on the geopolitical front, specifically when it comes to conflict in the Middle East. It has been jarring for sure, but interestingly enough, not as jarring from a straight quantitatively volatile perspective with regard to the markets, as volatile as the tariffs impact were or was at the end and beginning of April, kind of into that May period. So what exactly do you attribute this bout of volatility to, and is tech a good enough theme to weather this kind of geopolitical risk?
So I think investors and advisors in 2025 are getting used to this being a more volatile time period than they were a month ago or 2 months ago or 3 months ago. I think they're more accepting of the volatility, but we certainly at the ETF flows level, we're seeing stronger interest in fixed income ETFs, in short-term fixed income ETFs, the earn some income and not take on much risk. And then also we're seeing people buy more broadly diversified ETFs. The Vanguard 500 ETF is on pace to again break the record for net inflows for a year before anywhere close before the end of the year. So people are using sell-offs as a buying opportunity. You asked about tech. Tech is the heaviest weighting within a broadly diversified large cap ETF like Vanguard 500 or others. So I think many people are having tech and AI as part of a broader portfolio as opposed to leaning in solely onto the technology sector.
Hey, Todd, as you look at the landscape for ETFs, there's been a time when some folks, investors out there, both on the retail and the institutional side, have viewed the tech trade or those mega cap type tech names as a maybe safe haven, if you can even call it that. But they were relative safe harbors in some stormy conditions. Does the tech trade from that mega cap level still appeal to some investors as a relative safe haven trade, or does it expose itself to even more volatility now because it's run so far so quickly in the past 10 or 15 years?
So Dan is going to have more of a valuation call than I am, but we're certainly seeing that investors that gravitated towards tech, in 2020 when we had the COVID sell-off, technology was the safe haven. That was the lowest risk part of the marketplace. Now we're seeing a flight to safety in the equity markets in some of the more defensive sectors, utilities or consumer staples. So tech is a relative safe haven, or I guess large cap tech is a relative safe haven, but we are seeing investors want the benefits of diversification with some of those more traditional defensive sectors.
Dan, because we broached that topic and we opened the window or door a bit on this, the valuation story. Mm-hmm. What do you say to folks out there who believe that this tech trade, after having the run that it's had, is now not as much of that quote unquote relative safe haven trade, because you would have wanted to be there 3, 5, 7, 10 years ago and not necessarily today?
Yeah, I mean, look, Dom, me and you have talked about this for decades. I mean, my view of tech, if you focus just on valuation, you missed every transformational tech stock the last 20 years. And I believe the market is still, it is massively underestimating what the growth is going to look like for the AI revolution in tech. So I believe valuation, okay, over the next year, you could say some of these are expensive. You look at the next 2, 3, 4, 5 years, given our view of autonomous, robotic, that's why I think we're going to be talking about NASDAQ 20,000, 25,000 over the coming years. And that's why any type of geopolitical sort of events, we always view as opportunities to own these names cheaper. That's kind of always been our view the last 25 years covering tech.
All right. Now, finally, guys, Todd, I'll go to you for this one first. Some argue that the AI trade really falls into more of that thematic bucket. There's a wide array of thematic ETFs out there for just about anything. If you can think it, there's probably an ETF for it. But how much of one's portfolio should be allocated to themes? You mentioned just how much in the beginning some advisors are allocating to the thematic trade. But is there any kind of a consensus building that you can see about whether that consensus is either underplaying it or overplaying it?
So I think many people feel like they're exposed to the AI thematic trade through larger cap strategies like QQQ or even SPY. So we think that the approach for AI and the thematic approach is a more dedicated, more targeted exposure So THNQ is one such example. There's some Global X ETFs, AIQ, that also offer a more targeted exposure. You want to make sure you're not completely overlapping your NASDAQ 100 exposure with your thematic ETF. But yes, to your other question of, there's a lot of them. There's a music ETF, MUSQ. There's some video games ETFs that are out there. There's lots of different ways to play thematic strategies. You just want to make sure you're not double counting your portfolio.
Okay, and Dan, the AI trade thematically also has a number of sub-themes, if you want to look at it that way. You mentioned a lot of them. It could be consumer-focused. It might be autonomous, robotics-focused. It could be power-focused. What exactly do you think your highest conviction is with regard to all of those sub or mini themes within the artificial intelligence trade?
To me, it's software, because in software could be hyperscaler, the use cases, cybersecurity. I think software, it's a golden age for software. That's why I think you see a lot of these traditional mature companies, Oracle, IBM, making new all-time highs. It's a renaissance. And I just believe it's something where software, you also see a lot of M&A there. But from a thematic perspective, it is just the, I think, beginning, of where this is all heading in terms of AI revolution. Software just starting today.
All right, because that's different than one of your big calls over the past 5-7 years, which has been Tesla. And Tesla, a case that you've made, not a car company, not even maybe a technology company, but more specifically a way to play autonomy and robotics.
Yep.
Is that still, that autonomous and robotics theme or mini theme, still something that you are high on?
Oh, yeah. Now, as a theme, software as the group, in terms of what I view as probably the purest play AI name along with NVIDIA, it's Tesla, because of my view of robotics and autonomy. I mean, I believe autonomous alone is worth $1 trillion to the Tesla valuation, which how we get to a $2 trillion valuation. So to me, it's a good example of we are just starting to what I view as this next phase. But the golden goose for AI is autonomous and robotics. That's why Elon and Jensen are so focused on those areas.
All right, and Todd, you're going to cap us off here. Let's talk about what you think is going to be the theme, if you will, in investing or ETFs that is maybe being overlooked right now as we head towards the back half of the year.
So I'm going to cheat on this and just say active management, whether it's tied to thematic ETFs or not. But active management is becoming increasingly popular. 40% of the flows in the first 5 months of the year have come from active ETFs. There are active thematic ETFs that are out there. BlackRock iShares has one of the more popular AI-themed ETFs. BAI is the ticker. I think active management is going to play a much larger role. We saw T. Rowe Price, for example, just launch some active sector-oriented ETFs last week. This is a growing space.
All right. Dan Ives at Wedbush, Todd Rosenbluth at Vetify. Thank you both very much for the time here. We've asked Todd to stick around for the ETF Edge podcast. Remember, you can also find all the previous videos and podcasts right here at etfedge.cnbc.com. We'll see you next week.
Get the ABCs of ETFs with the ETF Edge newsletter. Your weekly update on the hottest trends, expert analysis, actionable ideas, and exclusive insight from top industry experts. Sign up now at cnbc.com/ETF Edge newsletter.